Hi, and welcome to Sunday Night Charts, where we take a look at the charts for the trading week ahead to help you be a better investor. I'm your host, Steve Van Meter, and let's get right into what we're looking at. We have trend indicators on the short-term 9-day, intermediate-term 21-day, long-term 50-day, and ultra-long-term is 100 days. Moving averages on your screen, 50-day is going to be in green, 100-day in blue, 200-day in tan. We're going to look at price versus momentum. Remember, price is the general direction prices are headed. This is pretty easy to look at. Momentum is your rate of change. Think of it as you're at a stoplight in your car. When is your rate of change usually the fastest? It's off a bottom, off a zero, or at the top when you're starting to, you got to look at what rate of change is. So bullish indicator for both is positive and bearish indicator for both is negative. Momentum often, but not always, leads price. So when you see a lot of momentum, that is bullish. When you see momentum slowing down, that is bearish. Technical analysis attempts to determine where buyers and sellers are at. Resistance is the level buyers can't break, and support is the level sellers can't break, or resistance is where sellers are at, and support is where buyers are at. Remember, technical analysis and charting cannot determine future price. It just helps increase your probabilities and reduce your risk exposure when you're trading. So let's take a look at the S&P 500. Now, how should you look at this? The long-term, ultra-long-term are really where the market is headed. So you see mostly bullish signals. It's the shorter term and the intermediate term that can flop around, and they tend to quite a bit. But when you start to see short-term turn bearish, intermediate term bearish, and then you start to see these signals in here flip more to bearish, then guess what? You more than likely have a major trend change. So when we look at the S&P, we should go look at the charts and see that it's still trending higher, and now in the short term, it is moving up. And those of you who watched last week know the trends were pretty bearish, and certainly enough, we look at the S&P 500, and that trend has changed. See it bouncing off this 100-day moving average, crossing right through the 50-day as if it wasn't even there. And despite nearly $2 trillion of quantitative easing, what baffles me, because everyone says quantitative easing magically makes stock prices rise, we're still below the all-time high and marginally above the prior all-time high going into the March meltdown, which arguably, since we're doing quantitative easing, I'm not sure how that could have happened because, again, everyone says quantitative easing makes stock prices rise, but nevertheless, it's making a run at this potential upper trend line again. Will it keep that megaphone pattern intact and break through and into a new bull market? Well, the bulls are certainly hoping so, and of course, the bears are not, but the trend does remain bullish for the moment. How about we switch over to the NASDAQ? Not much of a difference there in terms of what the indicators are. In fact, no difference. The trend on the NASDAQ is bullish, and the short and intermediate term indicators have flipped back from bearish to bullish. And of course, we see it's kind of sliced through its 50-day moving average as if it wasn't there. Found support right here above where I was expecting it to dip down to, but kind of at the upper end of there's your supply zone right in there on the NASDAQ between, say, 10,500 and 10,762. And it is, again, this is a bullish trend until otherwise spoken. Let's flip over to the Russell small caps. And we have a slightly different picture here. On the longer term trends, it's trying to decide is it bullish or bearish. So that should speak to us that even the shorter term indicators are bullish, that the market is trying to reconcile where the small caps are going. Since small caps tend to lead large caps, it's very interesting to keep an eye on, say, the Russell 2000, which tagged support and just took off like a rocket. Now, how do you interpret that? That means there are still buyers. So when you see prices hit support and take off, it tells you there is absolutely buying demand at these levels, and it clearly shows that there was no shortage of buying demand as it bounced off its 200 and 100-day moving averages, rocketed through its 50-day, and is looking right above its all-time highs, where, of course, the bulls want to see a breakthrough there. So small caps see a definitely bullish trend, but look at the longer-term trend of price. You can see the 200-day moving average is pointed down. So again, there is a bit of misdirection on the longer term trends that could lead to a flip, because what did we see there? The momentum signals are saying that rate of change on the long end is slowing down, and that is important. How about the energy sector? Was all red last week, and now in the shorter term, we're seeing a potential change. It doesn't mean it is a change; it's a potential change where the short-term indicator and intermediate-term indicators are trying to flip from bearish to bullish, but the long-term trends are clearly bearish. Let's go take a look at XLE. Now, long-term, I do believe there is a play in the energy market. Many of you heard that. I don't think that's in the short term, because energy tends to only recover after the economy is coming out of recession, when inventories are depleted and demand resumes. So what do we see here in XLE? It came down, found some buying support just above where I think the supply zone is. I could be wrong. I may need to adjust that. And it found some buying over this last week. It's coming up right to the top of that prior supply zone. The 50-day moving average is trending down, and the 100-day moving average is trending down. That is telling you that usually prices don't bottom, and because off small moves like this, because price bottoms are a process. When we look at the dollar, you'll see a process. They are not an event. Bottoms are a process where buyers are trying to absorb all of the selling from the sellers, all that inventory. So remains to be seen on XLE, but the longer term trend still says it's more likely to go down and up. I'm looking for at least a retest of its all-time lows, maybe even a breakthrough from that. Financials are bullish, so you can see that short term, intermediate term, pretty much almost across the board, financials are bullish, suggesting economic recovery, suggesting inflation. Well, let's take a look at what's going on in the financials. And it bounded right off of the supply zone between 23 and 24 and just crossed right through 3 moving averages and hit the top of what has been very consistent resistance in the financial stocks. On XLF, that's right around $25.30. Now let's overlay Treasury yields here, because this is a part of the reason we've seen yields rise, because bank stocks have been rallying off that point there. And what does that tell you from a perspective of Treasury yields? When we overlay 30-year, that this level of resistance for financials could signal a big reversal in Treasury yields. So if you're bullish on the bond market, you want to see this stick here. If you're bearish on the bond market, you want to see that buyers move through this overhead resistance and break out through all the selling pressure that's been right up there. But overall, the trends are bullish. Let's go on to utilities. I've been pretty bullish across the board here on the indicators on utilities. Moving on to industrials, XLI, again, very bullish makeup. All of a sudden, we just saw over the last week and a half, bullish on the market, mostly due to stimulus optimism. How about gold miners? Remember, this was a pretty bearish picture last week, and we can see in the short term, it's turned back positive. Intermediate term, it's still trying to work that out, but the longer term trends are still bearish. So let's take a look at the chart on GDX. I know that's a very popular ETF for many of you. And what do we see? It trailed right around its 100-day moving average. Found buyers, many are now saying, okay, this is the final move lower. Now this thing goes off to the races. It's sitting under its 50-day moving average, right under the supply zone where we've clearly seen sellers at. This is now a strong uphill battle for GDX. It's got to get back into the supply zone, work out the sellers, and go higher. But remember, even though I am personally not a big trader of moving averages, some people like to trade the crossovers and all of that. The moving average is acting as a headwind and showing that price and momentum on the longer trends are slowing down. So it'll be interesting to see if this short-term move can hold or roll over. The dollar is probably one of your key indicators to look at there. Let's go on to emerging markets. And emerging markets are a great proxy of liquidity, great proxy of where markets are headed. And you see nothing but green practically across the board here. And the trend on EEM is broadly bullish as well. And you can see this thing is sitting, not exactly at its all-time highs, but, it's pretty high up there. I mean, it's breaking into what could be a strong move higher in EEM. It's got to get through, let's say, the recent high of 46.32, and that's very bullish. It's just suggesting that there's liquidity in the global economy and there's a change going on. So if you're looking for direction of where U.S. equities are headed, keep an eye on emerging markets. So far, they're saying nothing but green on EEM. How about Treasuries? Wow, look at that. Completely bearish across the board. And again, indicators, technical analysis doesn't always tell you everything. Let's take a look at the chart of TLT. You've got moving averages rolling over and heading lower. We've got, a move down in price, a consolidation zone, a move down in price. What you can't see in this chart is a massive amount of shorts that are sitting in on the bond market. It's holding at the moment. It's 200-day moving average. If it can hold this and start working out those sellers, that could be a massive springboard higher. So again, not all the trends do not always tell you the full picture, but it gives you an idea of potentially where things are going. I think most people know my view on the bond market, so we'll leave it at that. Moving on to high yield bonds. Again, here we go, a flip on the short and intermediate term to bullish. Again, suggesting that what we're seeing, all this last week is bullish, bullish, bullish on economic growth, bullish on stimulus, bullish on the future of the economy. Now, on the long term, high yield bonds are still bearish on their signals. Let's take a look at what's going on in HYG. Where are you, HYG? Should be right there. It is. And what happened in HYZ? It came right down to the supply zone, and bam, it found buyers. I mean, look at that. It came down. I thought it may break into here and get below. Not even close. I mean, buyers were literally waiting for it to hit this level of support, and they just jammed prices straight up. Again, short-term trends are positive. Long-term trends are not. This is a big indicator. High-yield bonds also give you a signal of where equities are going. They need to break out from these two prior highs here. If they can't, well, they will likely lead equity prices lower. On to gold, short-term bullish. But look at the intermediate term, long-term. I mean, the longer-term trends are telling you that gold is not sure where it's going. Intermediate term is still not sure. Only in the short term, which, of course, everyone said that gold was bottoming here. And this was the final bottom before it moved up. But all we can see is it hit the 100-day moving average. Didn't even get down to the supply zone. Didn't need to hit the 100-day moving average. Buyer stepped right in and is now running up right into a zone where there were prior sellers. You can see where people were unloading their positions is right here between, say, 1936, pretty much where it closed on Friday, and up here around 1961, 1968, somewhere in there. You can see this is where the last supply zone one, where sellers were getting out of their positions. So gold's got a lot of overhead resistance in its path and a moving average on the 50-day that's rolling over. Let's take a look at silver. Silver futures, almost the same picture here, except on the long term you can see a flip from bearish to bullish. The same kind of story on silver. Let's take a look at it. And what do you see? It's following gold fairly closely right now, except it's in order to get into its supply zone, you would need to see silver go from 25.30 all the way up into, say, 26.75, 26.50. It needs to go a lot more to match that same supply zone. It barely, just one day tagged this 100-day moving average and just followed gold higher. Same setup to me. It tells you it's got a lot of overhead resistance it's got to work through, because sellers were clearly selling up here in the $20, $30 range all the way down into the, mid 26s. What do we have next? The dollar. Ooh, look at the dollar. Bearish nearly across the board. Isn't that interesting? Very, very bearish view on the dollar from the trends. Let's go and take a look at the dollar. Because, long term, I'm very bullish on the dollar. Short term, everyone is super bearish on it. But this is kind of what you want to see in a bottoming pattern. You want to see prices come down and start to consolidate. You want to see a break over the 50-day moving average and a return either below it or right around there. So what does this mean for the dollar? Let's zoom in a little bit, because I got a number of emails that says, the dollar's going to head below 92, maybe low 91s. That doesn't really appear that way to me, because you see there's a lot of buyers on the on the DXY around 92.75 and up. Now, does that mean it can't dip down in here, maybe into the mid 92s? Sure, it can. But this is a consolidation pattern. To me, it looks I'm sorry, let me rephrase it. This to me is a bottoming pattern, not a consolidation pattern. You can see the moving averages are starting to bottom and roll. These are all trends that you would see in a bottom. Again, I expect this to work itself out a while longer. If it continues to stay within this trading zone between, say, 92 and 93.75-ish, you've got a bottom on the dollar that when it springs higher is going to unravel a lot of parts of the market. Last but not least, we've got Bitcoin on news that somebody was buying a massive amount of this or had bought a massive amount of this. Buyers jumped in and pushed Bitcoin higher. Remember, I still think the long-term bullish narrative of Bitcoin, you really want to come down and confirm this 9,000 to 9,500 range. I mean, it's possible this is where the buyers are at. I mean, to me, just looking at this long zone of buying over here, I mean, even if I took Bitcoin off of this, because I have neither bullish nor bearish, no opinion on it. If I was just looking at this as a security, I would love to see a reconfirmation down here at 9,000 to 9,500 where all this buying was. It tells me that these buyers down here are real. The question is, are these buyers up here real? Because we know where the sellers are at. We know exactly where the sellers have been on Bitcoin. They've been, between, say, 11,250 and 12,600. The question is this recent buying from, say, early September to now, are these people short-term buyers or are they holders? That is the question on Bitcoin. All right, well, hopefully that helps you out as we go into the trading week, and it gives you something to take a look at. And if I can get to the right page on here, we'll wrap this up. I'm Steve Van Meter. I'll see you Monday as we're going to dig into the recent report from the one and only Dr. Lacey Hunt. I'll see you on Monday. The content of this video is provides educational information only. Is not intended to provide investment or the advice. Materials not to be construed as a recommendation or solicitation by a security, financial product, instrument, or to participate in any particular trading strategy. This video was prepared by Steve Van Meter. Personal capacity opinions expressed in this video that do not reflect the view of Atlas Financial Advising or Steve Van Meter Financial.